Hey YouTube, this is Zach with Achilles Financial, and today we're going to be talking about SPOK Holdings, which trades on the NASDAQ under the ticker symbol SPOK. This is a super unique company, and the reason that I found them is actually from QTR Research on Twitter, which is now X, and I will link that tweet in the description down below. But this is a company that primarily provides services for voicemail, personalized greetings, message storage and retrieval, and equipment loss and or maintenance protection for a number of industries, but the primary one that I've noticed and what's been called out is healthcare. And so this is a company that does a mixture of software and software support type of services, primarily, again, for healthcare. Now, right now, the company has seen a very large increase in their market cap following a very strong Q2, which has brought the market capitalization of this company up to $295 million. That is on the back of a very strong earnings report where they brought in around $34 million by way of total sales. For this particular company, what I'm going to be looking at is this ex-dividend date, which is going to be coming up here in the middle of August, which will give you a annualized dividend of $1.25. Now, that dividend is going to be total of about 34 cents a share. Now, this is going to be very interesting because the annual dividend yield is down from where it was earlier this year. However, I anticipate, and it sounds like they may be increasing the dividend in the future. It is currently sitting at that 8.46 mark when the stock is currently just south of $15 a share. Now, if we look at the chart associated with this company, you can see that over the course of the past 3 years, it has kind of hovered in this $8 to $12 range. However, over a very strong report in Q1 and guidance, as well as a strong report in Q2 and strong guidance, you continue to see that stock climb ever higher. So this provides us with an interesting opportunity to come into a company that, instead of looking at it as purely a long-term play, despite the fact that they do continue to grow, if I hover over to the fundamentals here and we look at the income statement, you can see that they have begun to grow again here on the quarter-over-quarter earnings, and this total revenue is beginning to climb once again. The reason that I'm calling this out, though, is the company is continuing to provide a significant amount of capital back to their investors. So down below, when we're looking at the operating expenses versus total revenue, you can see that expenses have continued to be mitigated while revenues continue to climb. However, down below, what I would note is that the company continues to provide a very hefty dividend. And again, you can see that 31 cents a share available to you here. And the question is going to be, with such a large amount of dividends going out, this means that the company is continuing to be very, very profitable. And that paints it as a very attractive picture by way of total or of a potential acquisition target. Right now, the company is at $36 million. And I'm going to take us over to their last earnings report to walk through some of the information that they provided. So once again, you can see here on the screen, this is the report for the second quarter. I will once again link this in the description, and I would highlight that they had their record level of software operations bookings. So they are finally able to continue, or rather they are continuing to book these large software deals, which will lead to that recurring revenue. Down below, you can see that they generated net income of $4.7 million, which is 23 cents per diluted share, which is a very large increase, more than 100% over what they saw last year at the same time frame. At this point in time, something that I would highlight is on the call, they highlighted that while the company appreciates all of the investors' participations, they are looking to return $50 million in cash to the shareholders, or rather they did that over the past 24 months, and they are going to continue to do so. So this provides us with an opportunity to look at the stock and determine, does this make sense for them to continue to be at these levels, or could we see a company potentially buy them out? So you can see down below, between the wireless revenue and the software revenue, that software revenue continues to grow. So you can see from the 3 months here, 36 million was up from 33 million the year before, and the 69.6 million versus 67 million the year before. So that is slowly increasing year over year, which is going to continue to be very strong for the company. Down below, I want to highlight the guidance that has increased. Once again, they are targeting really the upper half or the upper portion of that original guidance As such, I think that right now with the company trading at 300 million, where they're probably going to end up around 120 million, 130 million by way of total revenue, that means that they are around 2.5x sales, which would present a very attractive company purchase to a larger company. So this is one to watch and something that I'm going to be checking out. I'd love to get your opinions in the description down below or in the comments down below, and let me know your thoughts on this company. At this point in time, I think if they continue to hover around these levels and maybe under 16, that this is a position that may be worth checking out. It's definitely one that I may be looking to enter. If they're getting up above that $16 a share, probably won't be entering, but it still does pose some attractive approaches, recognizing that once again, someone could come in and buy at a much higher price. So let me know in the comment section down below your thoughts, and I look forward to hearing from you. Thanks. Talk to you later.